Hey, you guys, what's going on? It's your big dreamer and doer, G Dinero, wishing you a happy Friday. Holy mackerel, here we are, and it's time for Financial Friday. Today, we're going to talk about the relationship between the DXY, the M2, and BTC. What in the heck are all of those? But first, remember, none of this is legal, tax, financial advice, and should not be construed as such. So with no further ado, let's go ahead and jump right in.
Mufasa, you know we finally here, right?
Well,
It's Friday then, it's Saturday, Sunday, what? It's Friday then, it's Saturday, Sunday, what? It's Friday again, it's Saturday, Sunday. Let's go, let's go, what,
Caught you on that one, didn't I? I figured you guys would like Mufasa today. Hey, anyway, let's go ahead and start talking about what we're talking about today, which is the relationship between the DXY, DXY, which is the strength of the US dollar. That's the US dollar index when compared to a basket of currencies from around the world. BTC, which is Bitcoin. We all love, know and love that one. And finally, M2, which is the global M2 money supply, right? And as you can see on this chart, if we look back into late September, early October of last year, the DXY had bottomed out. It was down there in the, 100 point range, $100, 100 point range for the DXY back there in October, very beginning of October on the bottom left-hand side of the graph. Then what you see is the M2 money supply had spiked right around that time. Think of that as a measure of the liquidity, okay? A measure of the liquidity in the system. And also, Bitcoin was at a low back then. Hard to believe, but it was down there at around, $60,000, I think, back then in October, right? Then we had a thing called the election, and it popped in. And what you notice is the DXY has gone on a rampage from October all the way through the beginning of 2025. It rose from 100 all the way up to basically 109.64. That's where it hit its high. Okay, that means that the dollar is very strong when compared to all of the other currencies in the world. Okay, you also notice that the M2 money supply, there was a tightening of the global liquidity of the global M2 money supply from October straight through into late November and then again into early January. There were two lows there, both of them around 92. So the money supply squeezed from 95 down to 92. That's known as quantitative tightening is what we call it here in the United States, but that's basically a tightening of the liquidity. Liquidity being sucked out of the system. Prices are high. People don't have as much extra money sloshing around. The rates were pretty high still during that time frame, even though they've lowered them down 1/4 of a point here and 1/2 point there. Everything was still very tight. The money supply was very tight around the world. During that same time period, you'll notice there's a lag. In this case, it was around 77 days from the time the M2 money supply spiked to the time that the Bitcoin price spiked at 106, 137. And again, that was in, you'll notice that was in early to mid-December where we had that first spike. You'll notice that the M2 money supply bottomed out twice. How ironic is it that the Bitcoin price spiked twice? Notice Bitcoin in the meantime had pulled back into the low 90s at the beginning of 2025 and then spiked again to 106, 159 there in mid to late January, right? Notice it's mirroring the M2 money supply. It's almost like those two are directly inverse of each other. M2 money supply was screaming higher at the end of October, or at the beginning of October. Bitcoin's price was lower then. M2 money supply pulls back, Bitcoin's price spikes. M2 bumps, Bitcoin's price drops a little bit. M2 drops again, Bitcoin's price spikes. And what's the latest thing that's happened? The M2 money supply has spiked again. And that money is going to have to find a home somewhere. And likely that money will find a home in Bitcoin. You'll notice that the DXY has dropped dramatically. M2 money supply has spiked. Bitcoin's price has pulled back. If we look at that lag and we go with a 77-day lag like there was the last time, and again, past performance doesn't equal future results, but we have to kind of look at this and ask ourselves, if this pattern repeats and there's a 77-day lag from the spike of the M2 money supply to the high of the Bitcoin, well, if we go from the low of the M2 money supply to the low of when Bitcoin should start to make its way back up again, basically reversing direction, and we should start seeing Bitcoin spiking up around March the 28th. So again, to summarize, M2 spiked, Bitcoin spiked. M2 bottom, Bitcoin bottom. So with M2 spiking again, what we should see is Bitcoin spiking again over the next 77 days or so from when that M2 money supply hit its high, which takes us somewhere near the end of May. So I hope you found value in today's Financial Friday. Just something I thought I'd throw in there. If you did, make sure you like this video, subscribe to this channel so you see more videos like it. Drop a comment below. Let me know what you like best. Let me know what you didn't like, what I could have covered a little bit more clearly. Finally, book a course with me. Head on over to gdinerocoaching.com where you can book a course with me, an individual appointment if you've already had a course with me in the past or a previous one-on-one. And remember, this is G Dinero helping you increase your financial literacy so that you can find your financial freedom for you and your family on this Financial Friday. Take care.